Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the weekly time frame, where we're looking for a bigger impulsive structure to the upside in yellow, and inside the yellow wave 3 we have the lower degree green count 1, 2, 3, 4, 5, where preferably your 4 here is finished inside the common target area for your wave 4 between the 302 and the 05 Fibonacci, taken from the low to the high of 3, giving you a target area between 57.5k and 53.3k, with the invalidation being the 618 at 49.3k. On the 4-hour chart, we are then looking for impulsive structures to the upside to continue the trend, and here we have a finished wave 1 and 2, also a finished wave 3, looking for 4, and then continuation to the upside in a wave 5. Common target area for your wave 4 is the 0.236 to the 0.5 Fibonacci, taken from the low to the high of this wave 3, giving you a target area between 69.2k and 66k, with the invalidation being the high of wave 1 at 65.5k, because in an impulse you do not want to see overlap between a wave 1 and a wave 4. However, preferably, this wave 4 here is not yet finished and we continue the range. Most commonly, a wave 4 is longer in time compared to a wave 2. So if we then take a fib time from the start to the end of wave 2 and put it on top of 3 to compare wave 2 with wave 4 in time, preferably wave 4 is finishing after the 1-to-1 fib time, sitting on Saturday the 25th of May, 10 a.m. and a minimum target would be the 382, sitting at today 6 p.m. Central European Time. Local price action does support the narrative that the corrective structure in that case is not yet finished, because if this would be the low and you look for impulsive continuation to the upside, then price retrace to the 886, which is a very rare target for a wave 2, common for a wave B or a wave X, increasing probabilities that any move to the upside here is corrective in a C or Y, which in turn increases probabilities to sooner or later take the double bottom and continue that corrective structure in wave 4. The support and resistance areas around price are first of all the resistance above price here, 70.8k to 71.1k, and the support area here, 66.1k to 67.1k. The bearish but eventually bullish scenario on the weekly time frame is a 5-wave impulsive structure where your wave 4 is not yet finished, and after 4 you expect only one more push to the upside in a wave 5. Common target area for your wave 4 is the 0.236 to the 0.5 Fibonacci, taken from the low to the high of wave 3, giving you a target area between 62.2k and 49.3k, with the invalidation being the 618 at 43.5k. Time-wise, this wave 4 preferably continues to range, as we want to see at least wave 4 ending after the 382 fib time, taken from the start to the end of wave 2 to the end of wave 3 to compare wave 2 with wave 4. The 382 is sitting on the 6th of May 2024, but you can see that the low over here was made before the 382. Commonly, wave 4 is longer in time compared to wave 2, therefore ending after the 1-to-1 fib time, which is sitting on the 12th of August this year. However, this wave 2 was quite long in time, and the rule of alternation would say that if wave 2 is very long, wave 4 does have a higher probability of being a shorter corrective structure, after which we then expect continuation to the upside in a wave 5. To continue this range in the bigger yellow wave 4, we're then looking for a zigzag to the downside in an ABC, with a leading diagonal in wave A finished zigzag structure in B, and then a 5-wave impulsive move to the downside in wave C, moving below the low of wave A at 56k. A common target area for a wave B still is the 886, taken from the high to the low of this wave A. Any structure to the downside now has a higher probability of being a C or Y, increasing the probabilities to sooner or later move to the upside to take the all-time high at 73.8k, but as long as you don't take the low of wave A, this is an invalidation for this scenario. That means that on the lower time frames, we are now looking for impulsive structures towards the downside, because a wave C has to be an impulsive move. So on the 15-minute time frame, what we're looking for is an impulse towards the downside. We have a finished wave 1, 2, 3, looking for a 4 to finish, and eventually a final wave 5 towards the downside. It has to be said that this wave 2 is incredibly long in time. It is 11 times longer than this wave 1 if you take a fib time from the start to the end of wave 1, which is very rare for a wave 2. For this wave 4 over here, the 0.618 is an invalidation as long as you don't take this low at 69.1k with the 618 sitting at 70.7k. So if price would move towards the upside and hits the 618, probabilities are higher that this is a corrective structure versus an impulsive structure. Probabilities are also higher that this wave 4 is not yet finished, as over here price touched the 886. So if this would be the end of your wave 4 and then a potential flat, and you're going to look for continuation to the downside in 5 waves, you want to count a 1, 2, and then a 3, 4, and a wave 5. But wave 2 then hit the 886, and the 886 is a rare target for 2, common for B or X, increasing the probabilities to sooner or later take out the double top over here. Looking at these CVD divergences, we have both bearish and bullish CVD divergences, but with a CVD, I do prefer to look at the CVD on the right side of the most recent high or low, and this is currently the most recent low on the chart, where we have 2 bullish CVD divergences here. We also had a bit of a bearish CVD divergences, but this one already played out. We also have some news today. We have news at 8 p.m. Central European Time, FOMC minutes, so that might increase the volatility, so make sure you trade safe around that hour. And if we then go to the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario compared to the bearish and then bullish scenario, where we continue the range and then move up at a later stage. On the 4-hour time frame, the probabilities at the moment are higher for this to be an impulsive structure to the upside compared to this to be an ABC and more downside to come. And on a 15-minute time frame, we have an 886 touch both at the local high over here as well as at the low. Probabilities are higher to sooner or later therefore take out the double bottom, though first possibly we might actually take out the double top to hit the resistance above before moving down. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.